Good morning, everyone. And here we are, entitled today's meeting, Welcome. We're waiting for Godot because we're just waiting and waiting and waiting for the FOMC. And, you know, anyone that's been slightly paying attention, if you're listening to this, you've been paying attention. We've been, since the Thanksgiving, here, let me just do it with SPX, rather than the continuous one. Since the Thanksgiving breakout and chartists insist impending gap fill, whether it's this week, this month, or February 2026 or February 2038, we have this gap fill here right at 67.75, which is in the 200, in the 20 and 50-day converging moving average-ish area. That's a little lower. And other than that, once we kind of broke out and took 6,800 after Thanksgiving, it's been a 100-point range, within the 100-point range for about a week. Oh, and this I can get rid of. That was, oh well, I should have left it. It was a cool note. Maybe I'll remember to talk about it. And from a systematic fund point of view, that's actually a good thing. Volatility control funds and hedge funds broadly will allocate how much exposure they have to the S&P based on different algo formulas, secret sauce of realized volatility to implied volatility. When realized vol is too high, they lighten up. Well, we've had realized volatility basically in a coma for about a week. Now, to us trading zero DTE or short term, it looks like there's been a lot of volatility, a lot of chop. Basically, we've gone nowhere since Thanksgiving. It's a good thing. Let me point out what I had, this little thing that I erased. So yesterday, I don't know if I can show it clearly enough. Yesterday, we had a great, from a gamma point of view, setup. Where was it? Tuesday. Let me find the time. This is worth talking about, I think, if you're a gamma geek. Okay, let me try to zoom in here and show you what got me excited as a gamma geek yesterday. This closing thing right here, this closing 5-minute bar. We were at 69, 38, 37 with a minute or two left to go. See this bar? See that? A minute or two left to go. So we were chatting in the voice stream room in my Discord, and we were looking at it. And when we looked at that view, we saw that there were like about 2,000 or so customer long calls right there at 69.40. And I said, if we can get to 69.39, 69.40, those calls go from like a 0.45 delta to a 0.5 to a over 0.5 delta. And then they decay up, they rapidly become a 1 delta in that last minute. That'll cause some real buying. That's exactly what happened at around, just for fun, let's look at like a minute chart. So this excites me. Probably doesn't excite anybody else, but this excites me. So where was it? So I'm going to ask you folks to indulge me. No, I can't find it. Is this it? Yeah, here we are. 3:56, 3:58 p.m. right there. We crossed above 340. As we got closer, market makers had to buy because the delta was increasing rapidly because gamma is time dependent, and we had 2 minutes left. And we crossed above 68.40. Beautiful. Textbook gamma, end of story. So anyway, now that I'm finished with all that, let's get back to reality. That was then, this is now. Okay, so here we are below 68.50, and the reason I'm calling it a magnet is because I'll show you in a second on options that we have big market maker positive gamma node right there. Somebody, and maybe it was Chewy, sold a few thousand 68.50 puts right there. That's minus gamma, it doesn't matter if it's puts, calls, whatever it is. And so that becomes a magnet inflection point. If we're under, as we go up, they have to sell. As we go down, they have to buy, just looking at that in isolation. If we go over it, it does the same thing from the other direction. If we're over it, now we're moving away. As we move back down, they have to buy. As we move away, they have to sell. And there's another big node up here at 68.90. So we have 68.50, 68.90. If above here, up near 68.90, kind of like where the local highs were, where we kind of topped out yesterday and at the open near that area. But on Friday, we went to 95. And so there's sellers up there. And so that becomes another zone with that 70, 75 area where we've kind of had the trying to be breaking out from and kind of been failing or whatever, maybe you scalp a little bit. That's roughly the midpoint of this triangle. Boom, 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 boom. Or below it's a little messy. We have the bottom of the expected move and chop area right down here, 68.25. There's a little bit of a shelf down here at 68.15. And then there's really nothing below till here. Okay. Just quick switch gears. So today we have JOLTS, job openings, labor participation, whatever. And so the market will get algo-y about that. Now we have the 10-year bond auction at 1 o'clock. And the market may take that seriously, whether to the good, to the bad, or to the whatever. So those are two things to keep our eyes on. Okay, let me switch to, okay. So here's what I was looking at. 68.50, right here. This is options depth, DM me and I'll send you a discount link. 68.50. If we're below it, like we are now, as we approach it, we stall, and we're in this little sticky zone, really from 25 to 50. So we see it's what is it? This is 45. Excuse me, 45. My bad. 45, 40. We have this little sticky area, so we have to stay over 45. If over 45, we kind of have this market maker negative gamma actin to try to get to, if we can get through this little 60-ish area. So we have this triangle right here. From here, boom, stall, boom, stall. In between here, broadly, as we go up, they sell. As we move away, they have to buy. So this whole 65 to 85, 75 area becomes one battle zone. The lower part of this, because it travels both ways from, let's just say 75, 65 down to 45, 50 is another triangle within a triangle below 45. There's not a lot from a gamma point of view until 6820, which yesterday happened to be where there were a large systematic fund that comes in every day and sells near the open, parked themselves with around 8,000 contracts, and they stood there like soldiers. Love them. And we couldn't get past it. And I hope they come back again today. I'm sure they will. I'm just not sure where they'll come back at. Probably down here somewhere. And then we had a second fund came in at 6810, the chicken shit fund, they call them. And so that was two layers. And here we don't have a lot of gamma from nearby. We have the huge 100 wide gang that sold some puts all the way down here, and they'll be back again selling for tomorrow. And that's basically the short version of the story. So we're kind of, I should have called it 45. I don't know if it moved. So anyway, now I'm gonna get my chart. Let me just do one last thing. Let me get E-mini up. And there's the E-mini, and I'm gonna get my thing off. I'll follow along, looking at the chart. Whoops. And there we go. There's your chart. Take it away. Here's our E-mini and NQ scalper. And he also has a course which he may tell you about. He's modest.
Good morning, everybody. Want to start off by pointing out our range today that I have highlighted from 68.65 down to 68.45. I do have a bounce zone that I'm watching below at 45 to 40 in this area here. So kind of what I'm seeing is if we can hold this area, I'll probably be trying to trade from here to there for the remainder of the session until we break above the ceiling.
What's the bottom of your zone again? What's that drop deadline?
68.45.
Okay, thanks.
I'm a little bit more bullish into today's session by just the fact that we're in our bounce zone now. So I'd kind of like to see us push into open and see if we can just kind of pop through this resistance zone. If we can't, then I think we will get choppy. But if we can break above, then I think we can see a higher level up here before I think a sell-off maybe into FOMC. I'm getting ahead of myself. So from 68.45, take it to 68.60, 68.68. That kind of be the trade that I'm looking for at open. If we start to hold below my floor here, then I have 68.40 to target, 68.35, and then I'm skipping everything in the middle all the way to 68.20, where I'm looking for another bounce area, bounce, stall, however you want to put it. But from here to here is kind of the trade that I'm waiting for and anticipating today. I'm going to overlap Doc's ES levels here so you can kind of see how they align. We have this intraday pivot here at my sticky level, which is basically saying if we can hold above, we'll probably get an upside move. And then Doc's got his downside kind of bottom of chop down here at 68.35. You know, we're pulling it here with a 10-point difference. does that align with what you're seeing there, Doc?
Yeah, that aligns pretty well. That aligns pretty well. Some noise was coming in from the Discord server, and I couldn't figure out exactly who or what it was. Sounded like I was hanging out with somebody in the bathroom. But anyway, be that as it may, I think I muted him. Sounded like a him, not a her, not to sound sexist. Anyway, so yeah. And that 68, that zone that you identify is kind of the bottom of the expected move. Yesterday, we kind of kept pivoting around that, and we had lots of gamma interaction in that area. So it makes sense from multiple points of view. And from the gamma point of view, we got to kind of stay where we are and get about 5 points higher and stay there. Got to get above 68.50 on SPX, so call it 60-ish, 55-ish, whatever the difference is on ES.
Yeah.
And kind of stay there for a while.
And then you think that opens us up to the upside?
It opens it up to the upside over here. It opens it up for at least 10 to 15 points to the upside. And then we got to see what happens from there. So
yeah,
I'm going to put this chart up and just kind of like add your point differences. Okay.
Sure.
Now, I'm not sure how come I had the dark gray. I kept on making it white, but it kept on coming out dark gray. So I'm just impressed with myself that I could get lines on this at all. So I'm calling this a win. So here's that 68.45. So that's what, roughly 68.55-ish on ES, give or take a couple points. So if we can get over this positive gamma area, and here's where we're sticky, in this area here, then we've got the path toward here, maybe a little stall from 45 to 60. So there's your 10 or 15 points. And we have a little battle zone right here at 75. Here's where it gets choppy, sticky, all up in here. Broadly, we have 90 on top, so call it 6,900-ish ES on top. And if we can get up toward here, then we're like kind of fighting in this zone, this 10 or 15 point zone in here, where if this stays, this kind of becomes sticky, pulling us up. As we go up, they sell, but as we move down, they start to buy. So we have one sticky triangle zone here. We have another triangle zone broadly between 45.50 and 70.75 with this little bone in our throat at 60.65, say 10, 15 points from here that we have to get over. On the other hand, it's not pretty from a gamma point of view underneath 45. So underneath, we'll call it, well, I guess that's kind of your level, 35, maybe a tad higher. Under here, from a gamma point of view, 68.45 SPX, there's really nothing but negative gamma. Market makers accelerating into the direction of the move toward around this 25.35 area. We have a little bit of positive gamma stall here down at 15 and more further away. However, and here's our server, and here's Doc's commentary why throw shit in there. Here's my commentary yesterday, real time as it happened, about that little breakout thing. But I want to go to here, and if we look at the structure broadly, I guess kind of, well, it doesn't matter because there's no candles on the chart anyway. If we look at the structure broadly, there's positive gamma down below and above. And so as we go up, there's stalling stuff, but that's all the way up here near the all-time high. And as we go down, there's support, the blue down there, 6,800-ish, a little bit lower. That's just kind of broad structural. But within the battle zone where we are today, we have that 68.45 area. We have a little something. We have a path up towards, this kind of little path upward. If we can kind of stay up, we have this little trajectory up towards 60 here, 65, time dependent. Or if we kind of break below, we have this other trajectory kind of all the way down with that area in here that I highlighted before where the market makers are short, that accelerant zone, that traction zone right here in the 68, 40, 30, down there, basically yesterday's lows area. And that's what we got. That's what we got. Don't torture the data. I'm not saying we go there, I'm saying that's what we got. Now, one more thing. I want to go back to trading view. Quick volatility. And so there's your line there. Quick volatility thing. So yesterday, wow, VIX is over 17, so they ain't playing. Yesterday, we had typical going into Monday from Friday. Friday end of the day, VIX drop, Monday pop. But we had a little bit more than that. Here's the typical, popping toward from whatever, the low 15.5, whatever, up to 16.2, 2.5 even. Okay, fine, we expect that. But then we had this. We had VIX kind of teasing up near the high 1675s. Now we're at VIX 17. And what's significant to me as well, and you can't see it here as clearly, basically we had the VIX 9-day equal to the VIX, a couple decimal points lower, almost backwardated, basically flat short term. Okay, makes sense. We have the FOMC. So it's short-term hedging, which is putting more pressure on market makers to sell down to hedge what's near term, also being a potential tailwind. And to the extent that that's short dated and we stop going down, it kind of creates those little V crazy little bounces that we get with, and that's kind of tight, choppy action we get. VVIX, which in the morning was kind of yawning at this action, suddenly got interested at around 10 o'clock, 10:15, around here. Suddenly VVIX, the volatility got interested, and we kind of went, almost to 100. So I guess let's remember real quickly. So VVIX is 30 days out. It's taken the same calculation that the CBOE does on the VIX option strips and does it. VIX does it on the SPX, does it on the VIX option strips. And so there was some longer term hedging going on as well, but a lot more shorter term. So I just think it's, kind of a interesting setup. I tend to be a little bit on the side of if we don't really spike and go up to 20 over 19, whatever, after the FOMC, then all of this becomes a tailwind. All of this helps us go up. One more chart I want to look at here real quick. Is it this one? No, is it this one? Yeah, this one's nice, and I have some other ones that are kind of a little more wonky. But the VIX-VVIX ratio is in a normal range. you divide, nothing fancy, divide VVIX by VIX, by the time you got to fifth grade, you could probably do that arithmetic. Okay, high school. Okay, college. When that ratio is up here, we're kind of toppy. When it gets near 6 even, we're kind of toppy. We were kind of near that 6 area, a little toppy maybe. And now it's kind of pulling back, and that's kind of healthy. When it gets down here, we're in the crazy area, overdone to the downside. Here's kind of a more typical area where it might get to 15.5, within normal price action. So I'm just kind of keeping an eye on this. I like to look at this. I feel like we have a lot of headline risk. Well, I mean, the headline risk, I think, is basically FOMC risk. And, speaking of headline risk, though, as I was getting ready to feed the goats this morning, actually feed the birds before the goats, let me switch gears back to here. Where am I? I'm not sure what chart I have. So here's my more wonky VIX stuff. We had a kind of, where was it? We had this big thing in the morning. This, 55 down to almost 15, 20 point drop and pop bar. And so I was trying to think, well, what happened? And the only thing I saw, and if anyone knows more about it, they can tell me what got the algos all nervous, was something about the EU or something, saying some rumor that if the US forces this deal with the Ukraine and Russia, I guess the EU feels that we're giving too much to Russia or whatever, that they're going to retaliate by selling US bonds, making US interest rates spike. That's the only news I could see that corresponds to this. However, to your point, CK, it seems like the algos are very, like you say, nervous to headline risk. Okay, yeah. China will probably not allow NVIDIA to sell chips to China, so China doesn't want them. Okay, so there's NVIDIA headline risk, there's AI risk, there's housing headline risk, I know people think this might be unusual, but Trump might say something a little, to upset the markets. I know Trump is usually a very steady hand. He doesn't say much, says as little as possible, but he might say something that'll upset the market. And so, yeah. It was bad NVIDIA news. Oh, that's what it was? That wasn't that rumor? So the news was that China doesn't want the NVIDIA chips? Okay. I see. Huh. That's kind of, all right, whatever. That's all. To me, at the end of the day, that's bullshit. They're going to buy the chips. We're going to sell it to them, and they can fight it out and whatever whatever departments fight it out. To me, that's a bunch of bullshit. But still, it's headline bullshit, so it matters. So yeah, headline risk, sure. Hopefully, we don't get any headlines between, I mean, the next big headline is the FOMC, obviously. Hawkish cut, dovish cut. People trying to trap Powell in the press conference to say something. He's been doing a pretty good job of being somewhat threading the needle when they ask him questions. And that's it. 68.45. That's not a great place to be. Right, Trump? He's solid, steady hand. it depends where the vol sellers come in this morning. So let me switch gears real quick. I kind of have a feel for how these characters work. And gun to my head. Oh, really? There's this much juice down here? Wow. Down all the way down here, huh? You gotta be kidding me. That can't be right. Well, they'll come in somewhere down here. They come in around the 10 delta, 8 delta. They come in around here usually. 5 wide. So they'll usually do something like this or like that. You know, that's kind of what they do. They do 5 wide. That's probably a good 5 wide for those of you that are in the 5 wide club. 67, 90, 85, something like that. But for even a gentleman's 16, 15 wide, 60 cents, I'll take that and add to it if we go down. On top, I think from down here, there's no easy, no-brainer trade. I mean, you know, I'd like to be over 6,900 just to be out of harm's way. Gun to my head, I'll take that. But I want 55 cents for it. Put that in, we'll see what happens. On the fly side, since we're all the way down here, we'll look at the put fly in a minute, but should we get back over 45 and we have that path to 60, 50, 60, 70 for $1.15, not terrible. Not terrible. I'll see if I can lowball them for 85 cents as a starter position. Or a fly, maybe a 55, 65, 75, costs about the same thing. So potato, potato. Or if you want to get something like if we really get moving and get like something up here near 75, but I don't see any. It's just too thin up there right now. You know, we're below that negative gets, that positive gets bar. So until we can overtake 68, 45, 50 SPX, the default path is down. So Doc, if the default path is down, why are you buying calls? Well, I don't know. So we saw that 68.25-ish was a magnet. So we want to catch the convex move toward that. We had that 15 as a stall area. Hold on. I didn't do that right. So let's move this down. Well, we want to catch the move toward 25. Sell the stall at 15. Could that be right? That seems way too cheap to me. Somebody check on their thing if they have this butterfly basically for free. You know, I'll give them 30 cents for it, even though they want, you know, or you could try a fly. You know, somewhere in here, 30, 20, 10, 90 cents. That's not horrible either. And then what I do if these start to move, these are very forgiving. You can lose 10, 15 cents, or it could be a cowboy like me. And if it looks like we're okay, I'll add another piece and sell another one of these and make it asymmetrical fly with the number of puts to call, or make it a condor by selling something like that in it, and then kind of play with that. And that's it. There's really not a lot to do here. I'm going to go. We stay within the expected move. Probably, I'm a little bit nervous to the downside. We might undercut. So expected move right now, according to these people, is 28. Let's look at the E-mini expected move. That tends to be more accurate. 25. Okay, so 25 expected move. Now we're at 40. So that takes us down to 15. That takes us down to 15. And if people get bared up for whatever reason, okay, it looks like I pulled up the wrong chart. Is the right one? No. Where's my right chart? Oh, here it is. Let me go up. Here's the chart we want to see. I'm pretty tech uncomfortable, so I have a chart set up. And it works, I leave it. All of these are probably the same chart. All of these are probably the same chart. They work, I'm leaving them. VIX 6 panel, VIX 6 panel, VIX 6 panel. I know it's right here. That's all I want to know. I'm not going to delete these over here because who knows, I might never see it again, even though actually I know this is the same thing. But that's me. That's my cross to bear, so to speak. And so, yeah, here we are. Looking heavy. So EM bottom lower support 68.15. Now let's see. Well, thank you. Thank you. Always except for today. Is that what you're saying? Just kidding. We'll talk about commentary. Breadth is weak. Oh, speaking about commentary, getting back to what I was saying about the VIX and this whole mess, the VIX 6 panel, not to be confused with, where's my other VIX 6 panel? See that? I didn't even know what I had there. Not to be confused with this VIX 6 panel, which is the same exact thing. With all of this, we have, let me just see if I could find the put call ratio. I do this symbol, right? Okay. Put, no, not that. Put, not 40. Type of good. Where's the put call ratio? I have it on my chart somewhere. What's the symbol for the put call ratio? Anybody know it off the top of their head?
It's PCC.
PC, there it is. They have it as PC, put call, okay. Let's make it a line. And the put call ratio is actually not looking that nasty. It's actually come down from where it was earlier, but still slightly elevated. And so we'd like to see the put call ratio come down. a little bit. So I think these extra puts give us a little bit of more of that tailwind. Put call ratio is PC. And where's the equity only put call ratio? Is that CPC? Oh, here's total put call ratio. Let's see. Oh, there we go. That's the one I was looking for. Total put call ratio. Total put call ratio, that's what I was looking for, is elevated. Those were all those puts that we saw. CPC. Do I have it on my chart here? Let's add it. CPC. That's elevated. That means that people bought a lot of puts. These puts will either realize or they will erode and be a tailwind. So those of you that play with this is the one, the real one, quote unquote, the CPC. This is the one that you can look at the equity only put call ratio, the index only put call ratio, and the CPC, which is the whole mess. And anyway, so that being elevated, again, it makes sense in the context of this, the elevated VIX, and it's that whole thing. I haven't been looking at TDEX and SDEX in a while. Let's take a look at TDEX. TDEX is the 3 standard deviation out of the money. Let's see how that looks.
Guys, I got to get out of here. But if you have any questions or need server help, always feel free to DM me. I did post my chart in the cheat sheet channel for you guys to reference. I'll be keeping updates in there as well. Bye, everybody. Good luck.
Thank you. And so the TDEX, I mean, they were buying expensive tails in November. They don't want that anymore. Tiny little bounce. There's the 3 month. So the 17, the 1 month and 3 month looks okay. 2 points is okay-ish. But here I want to look at the SDEX, 1 standard deviation out of the money. And that also they were buying crazy hedges. Now here, let's look at VOLI, because at the money, okay, so it's all come down to normal. There we go. Thank you. PCCE. Thank you. I'm not going to do that now because I think I still have to post stuff. The more I try and streamline my process, the longer it seems to take. So maybe I should go back to the unstreamlined process so it'll get done faster. Okay, everybody, have a great day. I got to bounce.